How's it going, everyone? For the new people here, my name's Ian, and I had some confusion about my name. I am Futures. It's just Ian Anthony Muncie, my initials put together. That's about it. But so you can just call me Ian. But I realized after I made the 4 videos of learning how to do my strategy from A to Z. So if you haven't watched that yet, please go watch those 4 videos before you watch this breakdown because you're not going to understand a whole lot if you're not really, or if you're new to trading. But we're going to go over a bunch of trades that I took this week. I saved some, and we're also going to go over a little bit of my data from the strategy, or at least the past 2 months worth of my data that Tradeovate tracked for me, which I didn't know they could do that until now. So let's just hop right into that. All right, here's my data for the past 2 months. I think it's almost 2 months. But so far we have a almost 65% win rate with a total of 74 trades taken. Very good. That is a very good win rate for a scalp trading strategy. Very happy to see those results. I don't know about you guys. Very happy to see that. But let's just hop into the charts though. I just wanted to have you guys, look at that. You guys can look at all this other stuff if you feel like it. That's our total profit on the account so far. I actually have some that are a little bit lower because Tradeovate likes to, be a little bit rude and just delete your copy trader or group trader off the face of the earth every now and then. And one of those days I didn't notice that my group trader right here got deleted. So I accidentally entered all 8 of my micros on one account. And that's why you see a few down. I should be in profit $950 to $1,200 on all of them. But a few of them are down a little bit more because there was 3 days where Tradeovate did that little glitch. And I took, 3 losses on these 3 accounts here, trading all 8 micros on one. Because if you don't know yet, Tradeovate, you just trade, like let's say you have 10 accounts, you just put 10 and it trades 1 micro on each of them. Or if you have 20 accounts, you just do 20 micros and you get what I mean, and so on. But all right, let's get into breaking down some trades, which I already actually made this video and I didn't record. Pretty awesome. Don't know why that happened, but had a whole entire amazing video, very good breakdowns, and didn't record. And also, as well, before we start breaking down, I promise this is the last thing. I'm going to start getting at least 1 or 2 videos every single week. I took a little break after doing, the Mastering My Strategy series thing, those 4 videos. Kind of took a little bit of a break and just focused on trading with people in the Discord, which if you're not in there yet, please join. It's completely free and you get to trade with me live every single day. And take trades with me if you feel like it. So go join that. And let's just get into the trades. So all right, the first trade. Let's break down this one. I came on, usually I start with the 4-hour time frame. That's always what I like to start on usually. I never really look at the daily or weekly because I have this little indicator here that shows me the previous 4 days. So went on to the 4-hour time frame. Let's actually go back a step here and click replay mode so it can just show us exactly where we came onto the charts. Okay, now we go down to the 4-hour, or up to the 4-hour. There we go. I did have trades for Monday and Tuesday, but I accidentally deleted them, not realizing I was supposed to save them to make a video with. So I did catch some good trades during the first 2 days of market open. But right here, so all right, we came onto the 4-hour, saw that we already swept the lows of the previous 2 4-hour candles. So our current liquidity sweep level that we marked off was right here. Draw on liquidity was the top of the 4-hour candle. So now let's just go down. Went on to the 2-hour time frame, saw that we were inside of this very clean move and that we were starting our pullback. Very simple. So I measured the low of the move to the very top. Boom, marked off equilibrium, which I already did with this dotted line. So our equilibrium is 50% of this move. And then conveniently right below that equilibrium is a 2-hour unfilled gap. So we have a 2-hour unfilled gap, equilibrium, our liquidity sweep level. Let's keep moving down the time frames. We have a 1-hour rejection block. So this right here, which conveniently is perfectly inside of our 2-hour gap. So you have a 1-hour rejection block, which is also a 30-minute rejection block and also a 15-minute rejection block. They're all the same exact wick somehow. I actually don't know how that's the case. I guess it was just the last 15 minutes of the hourly candle, and then price reverse, creating a clean rejection block on all those time frames. So very clean gap, unfilled gap, very clean rejection block, liquidity sweep level. And I'm actually going to go over this liquidity sweep level in a second here, which is just the low of, I think, a 2-hour candle. But it's a very clean one. I know it's in the middle of this move, but it's also very clean because I'll go over that in a sec. But all right, after we have all that marked out already, turned on my session indicator, marked off the first 15 minutes of New York session open. That's our open range breakout zone. So mark that off, saw that we broke it and never retested it yet. And we didn't break the high or break the low. Because if we break out to one side and then break out below, it's an invalid open range breakout. You want to see a very clean break to one side and retest and continuation off of it. So let's go on to the 5-minute. Turn off this indicator. So turn my notifications off. All right, this is why this is a very clean liquidity sweep level. So basically, price created this move up, right? After we swept this low here and had this move up, I thought price was just going to, continue lower and make our way back down to here. Instead, we stopped here, had another move up, and since we broke this high here, this is a clean liquidity sweep level. If price just pulled up like this and didn't break this high and then reversed, this would not be a clean liquidity sweep level. You want to see the very high be broken and a candle to close above it. Or even a wick. Sometimes you can just have a wick above it. If it's a very long and it's a strong wick above that high or low, that's also a very clean liquidity sweep. That would also be counted as a very clean liquidity sweep level. So I noticed that, saw that this before was the actual draw on liquidity until we broke that high. So now this was the new draw on liquidity. So let's just kind of undo that. All right, so this is where we were. Let's go down to the 1-minute and wait for price to reach our zones, which I'll go over my entry and how I do my rejection block entries, because I know a lot of people have been wondering, or not like a whole lot, but a bunch of people have been wondering my rejection block entry strategy. And it's only for rejection blocks, not if we're breaking, retesting a gap or an open range breakout or any of our levels. It's rejection blocks only. So saw that price made its way down to this rejection block. We tapped it. We respected our open range breakout, filled our gap, failed to sweep this low here, which that's a very key thing to remember. This was a session low that we failed to sweep. So usually I'll put like failed liquidity sweep or failed session low sweep. And so that's what we had there. And the second price tapped into the 50% point of our rejection block. I wait for, because a lot of people with rejection blocks enter right off the tap. So right after this tap right here, they're already in the trade. I don't like to do that. I like to wait for price to tap into it, another candle to close respecting it, and then a candle to open and flip bullish. So basically, we had that tap, a candle closed respecting the zone, and then to make it even better, this third candle right here made a wick down, failing to break this low, and then reversed back to bullish. So while we were reversing back and flipping back bullish, I entered in like right here. Right, like it was like right here. It was a very good entry. And my stop was just that failed session low, because if we continued lower, then obviously we were going to want to sweep that low before having either a push down or a move up. So my stop was there. And yeah, basically I'll go over why I exited this trade too, because I exited a little bit early, because we did hit that full draw on liquidity, which I could have easily just held my trade to there. But the reason why I didn't is because I was kind of already like in a lot of profit. Like we were almost at a 1 to 5. So I was like, I'm just going to take my profit here. I don't need to squeeze more money out of the market. It already gave me a 1 to 4.5, which is more than enough. So I exited about here. It was a 1 to 4.5, like on the dot. So I exited, wait, no. Because I know I entered in like the close of this candle here. Like literally, like after this push happened, and then this candle closed like this, I got out of the trade. And then right after, the candles spiked up and hit the draw on liquidity, and then went down. So basically, we were very close to bottom ticking an entry, and then we were very close to top ticking an exit, because we completely reversed and swept out that session low, I believe, right after this. And yeah, sorry if I'm stuttering or like repeating a lot. I haven't made a video in like 2 weeks, so I'm doing my best to speak clearly and not stutter. But there you go. That's the first trade. So let's go on to the second one, which I'm not proud of this day. And I'm actually excited at the end of this. I'm going to break down a new thing that I'm adding to my strategy. It's very simple. It's just another zone that you can add to all the other confluences and levels that I teach. Which, if you know Cramson Capital, then you already know this zone. I just use it a bit differently, a little bit differently, not too much, but a bit. And yeah, so thank you, Cramson, for kind of teaching me, or for teaching me this confluence, or not confluence, but strategy, how I use it as a confluence. And if you haven't watched him or don't know who he is yet, please go watch him. He is a very good teacher and just good trader all around. So let's go to this day, which I'm actually kind of mad. I don't know. I can remember it. So this day was a horrible trading day. That's all I'm gonna say. I basically entered in for a trade here. All right, so these are the trades that I took this day. And before I break it down, the original trade I wanted to take was this right here. I wanted to take this. I either wanted to enter in here because this was a very clean entry right here, and there was a very clean entry right here. So either or, one of the two entries, and I wanted to hold till this high here like I normally do. This was the trade I wanted to take. Basically, what happened was I missed out. I didn't really miss out on anything. I thought I was going to miss out on the move, so I started FOMOing into a bunch of trades. Not proud of it, but that's what happened. Let's break it down. We'll break down how I viewed today, because it was a very good trade. My strategy played out 100%. It was very perfect. It was A+ setup, F- execution. So let's go on to the 4 hour, see what happened. And I forgot to do this again. I have to go back a little bit. And click replay, start new, right here. So we came onto the chart around what? This is 8:30 or almost. Let's go on to the 4 hour, see what's going on. So the first thing I noticed, excuse me, this 4 hour candle closed, having a sys D / shift of structure right here. Very clean sys slash shift of structure after sweeping this low. So right off the bat, I was already wanting to look for longs. And conveniently, usually this is my liquidity sweep level, the low of the 4-hour candle. But like I was just about to say, conveniently, it's a session low. So I have it marked off as SL for session low. And yeah, let's go on to the 2-hour. Same thing, I didn't really notice anything besides this liquidity sweep level here, the low of this 2-hour candle. But it was basically the same thing. We had two shift of structures slash sysds, one right here and another one right here. That's really it. Nothing too crazy. I did see that we had this huge 2-hour unfilled gap, but we already tapped into it with this candle and delivered off of it, and then had that shift of structure slash sysd. So I kind of assumed that price does not need to make that big of a pullback down into this gap and fill it. That was kind of my thinking. So all right, let's keep going down. First thing I did, notice that we were in this move here, which it looks cleaner on the 15 and 30 minute, but I'll show you. And I marked off this as another liquidity sweep level, which I'll show you why all these levels are in very clean liquidity sweep levels. But I came onto the chart after marking off those, the session low, this liquidity sweep level, this one, and EQ. Or no, I'm about to show you EQ right now, my bad. But we measured from this low to this high, the current move that we were in. Boom. And we just put right here this dotted line that I already have marked off. This is just how I measure it. I use this box, measure the high and low, and then I grab one of these and just make a dotted line. That's our EQ. Go down to the 30 minute. Notice that we had a very clean 30-minute gap right here, right below our equilibrium, right below our liquidity sweep level, and so on. It was also kind of inside of this open range breakout. So this is a very clean setup. And we also had a 30-minute, which on the 15-minute it looks cleaner because I just didn't like how we were overlapping all these boxes. So I was like, might as well just mark the cleaner looking rejection block. We do have a 30-minute rejection block and then a 15-minute rejection block, which I just liked how it looked on the 15-minute better, but either or works. So 15-minute rejection block, first 15 minutes of New York session open right here that we broke and never came back to retest. So we had our open range breakout, 30-minute gap, rejection block, two very clean liquidity sweep levels, and a unswept session low and equilibrium. Boom. So let's go down to the 5-minute and start looking for, potential signs of an entry. And that's why these, it's kind of the same reason what I broke down before in the last trade. We have, this is the session low, but we have this move. The high of this move got broke, making this low a clean liquidity sweep level. We continued up, and we didn't have a 2-candle pullback, so I didn't really like this low. But then we had a nice move down. Sorry about the stuttering, Jesus. Oh my God. But we had a nice move down right here, and this looked very clean as a low, and it was conveniently the hour candle low. So this was another clean liquidity sweep level that, the high right here, or this high, whatever you like to add, either the wick or the structure. Both highs got broke, making that a clean level. So all right, we're just waiting for a pullback now. Boom. Pulled back into our open range breakout, pulled back into our liquidity sweep level, 30-minute gap. We were in a discounted price zone below EQ. So now let's go down to the 1-minute. And this was my first entry. Horrible. This first trade was just super dumb. Basically what I wanted to do, I thought I was a genius, and I was going to catch a sell down to where I wanted to buy from, which was 50% of that rejection block. Did not happen. We completely reversed. I got stopped out there. And then I got a little, and then I was like mad. I was not really mad, but upset about taking that first loss. So I FOMO'd into another sell, which worked out good because we respected this bearish 1 minute gap. So I was like, all right, we're probably going to return back to this 30-minute gap, which we easily couldn't have. This could have easily just stopped me out. So for you guys watching, don't do this. And I actually made a reel about these trades because I wanted to be transparent, but I was actually just going to show the original trade. I was going to show this one right here, which I didn't take. And I was just going to say that I trailed my stop too heavily and I only made $60 because I did not want to advertise over trading and what I did here or on this day, because I still profited and I still made money on this day, and that's why I didn't want to promote it or like advertise that you can overtrade and still make money. So I was just going to say I took a trade and I trailed it. But I was like, that's complete lying, so I didn't want to do that. So those were the first two trades, and basically I risked, since this stop loss was half the size of this, I traded 2 micros on this trade and not, because this was only trading 1 micro, and then I traded 2 on this one. Excuse me. So I lost, like, I think it was like $100 on this trade, a little bit less, and then I risked 2 on this and then made like 100 and something. So I made like, I was in profit like 150 or something, and I didn't stop there. FOMO'd into more trades because I didn't want to miss out on the move, and I didn't enter off of this trade here because I was already nervous, because I was already in a bad state, over trading and taking stupid trades, so I didn't enter off of this very clean entry signal there. Saw that we were having this move up, and I was like, all right, I'm just going to be done for the day. That was about it. Saw that we were, or you'll see in a sec, but we had another pullback that swept. No. The reason I took this trade here is because my idea and my thinking behind this trade and entering early off of it was that right here, you can see that we had this big pullback, and then we had a push up, and then price failed to sweep this low and then had another move up. So my thinking was that I was going to catch this trade early, bottom ticket, and catch another buy, because I didn't think we were going to sweep this low, just how we didn't over here. That's not what happened at all. We got stopped out pretty much immediately. And then we had right here a inverse fair value gap with a bunch of unfilled gaps above. So right when we had this inverse gap, targeted all those unfilled gaps. And then we hit our take profit and left that day in profit around $60. All right. So now let's get into the final trading day. And this is where I'm going to break down my new thing I'm adding to my strategy. Which, thank you, Cramson, again, for the knowledge. So, all right, came onto the charts, which I actually wasn't going to trade today because it was a bank holiday. But I went on my phone. Usually I get on at like 8:30 and start. Got on at like 9:15 today because I saw a very good potential setup. Sorry, I had to itch my foot. So came on, saw we closed outside of this previous candle range, and we inversed this 4-hour bearish gap, and we were already done with this push and pullback. So I was like, all right, we're going to have another move up. So we inversed a gap, had marked off our bullish POI and then the low of this 4-hour candle. So we had our liquidity sweep level and a 4-hour POI. Let's go down to the 2-hour. The 2-hour time frame also had a bullish POI, and then it had the same liquidity sweep level. Let's go down to the 1-hour. Saw that we had a 1-hour bullish gap, which I kind of just connected all these together. But we had a 1-hour bullish gap here. Go down to the 30 minute. We had a 30-minute bullish gap right here. And then go down to the 15-minute. We had a massive 15-minute gap here. So I just combined them all. And then after we had all this stuff already marked out, I saw we had a very clean 15-minute rejection block right at this low. And then we marked off equilibrium, which looked the cleanest on, I think, the 30-minute. Or maybe the 1 hour. Yeah, the 1 hour move looked the cleanest. I thought it was the 30. But we measured from this low to this high, the current move we were in. And this is where I actually took the trade. So this candle does not count. It's this high here. And 50% point, already have it marked off. Right there at equilibrium, which was conveniently inside of this 15-minute gap. So with all that being said, and we didn't have a clean open range breakout because, as you can tell, if we go down to go up to the 15-minute, we broke the low and then broke the high. So there's no clean open range breakout. We broke this low and then it's just not respected. So no open range breakout today. Just our bullish POIs, and then the very clean or very obvious prominent low is our first liquidity sweep level, and then our second one was this clean low here. So with all that being said, the reason I didn't wait for any of that was because I had all that stuff marked off, but right after I marked all this stuff out, I was like, why would price want to make its way down to here if it's a bank holiday and there's no volume? So price is just slowly chopping up. And I was like, all right, why would price want to even come down to this bullish POI here? There's no reason for it to do that. There's no volume. So I noticed that we were just going to be in a slowly chop trending day from, just this move here. So I saw that we tapped in this 4-hour POI right here, and then I waited for a candle range flip on the 5-minute, breaking back above this 4-hour POI, which was this here. And then I just waited for this candle right here to create a wick and then start flipping back bullish. And I entered during that. So I took my first loss here, and then, which the stop was a little bit more. And on bank holidays, I just go for 1-to-1s. I never, if I do trade them, I only go for 1-to-1s. We also had a SysD/shift of structure right here, which I'll break down this zone in just a sec. This is the new thing. So the new thing I'm adding just as another confluence. Could have entered the trade right here though, because that was the confirmed SysD/shift of structure. Didn't want to do that because I wanted to wait for the 5-minute candle to end, which it ended, and then I waited for a wick pullback, got in somewhere right here, got stopped out. So that was the first trade. The second one was literally the exact same thing. I saw that price, didn't feel like, going any lower because the volume is so low. So we're not going to come down and sweep all these lows. Saw that we kind of just, I was the, the draw on liquidity, essentially. I got my liquidity grabbed. And then we had another SysD/shift of structure right here. Right there. So I entered off a little bit lower because I was just waiting for this candle to create a wick and then flip back bullish. So I got in somewhere on this candle here. And I just targeted a 1-to-1. Hit my take profit there, and I risked 1 micro on each, so it was just a break-even day. And now we'll go over my final thing I'm adding to my strategy, because I don't think there is literally anything else I can add to my strategy to make it better. I think this is the last thing I can do. We have POI levels, bullish and bearish POI levels, liquidity sweep levels, draw on liquidity, session highs and lows, equilibrium, unfilled gaps, open range breakouts, rejection blocks. We really don't need anything else. Like we have SysD/shift of structures. We have all the entries we need. So this is the final thing I think I'm adding to this strategy. Alls it is, and I'll explain why it's different from Cramson's in a second. You're just measuring from 8:30 to 8:15, just the market open range from 8:30 to 8:44. And then if we get rid of my zone, you'll see that it creates. Wait, actually, let's take a step back. Let me actually break down what the thing is I'm using, and I'll show you the settings. So what this thing I'm using is a volume. Wait, let me make sure I'm not going to mess up the word. Yeah, volume range profile. What it is, it just shows you a range where the mass amount of people exited and entered trades. It just shows you the biggest point where the most people were active, essentially, in a confined zone. So, what do we do with that? Well, let me show you the settings first. So these are the settings: inputs, style. You can pause the video and look at that. All it is it shows you the high and the low of where the most people kind of exited and entered trades. And then it shows you a point of control where the most volume took place, which I don't really use the POC, the point of control. It's called a POC. Don't really use it. I just use this as just a zone. That's literally all it is. So I measure, you add it to your little thingy up here, take it, click on 8:30, which you'll see down here, this is 8:30, and you drag it to 8:44, just before the first 15-minute ends. It shows you the high and the low. Now, you can make your own little box. You drag it from here, from the high to the low, and boom, now you have a zone. It's just how you would, it's exactly how you would draw out, a unfilled gap, an open range breakout, a rejection block. It's the same thing. You're just making a zone. So, the reason why I took this trade, once I noticed that the volume is so low, we're not going to have a big pullback. Notice that we broke and retested our volume profile range. Or our volume range. I don't know why I'll just say volume profile range. I don't really care. Saw that we broke and retested. That's why I took this first trade along with this SysD. First trade here, and then saw that we continued to respect our volume profile range. Entered in for another buy. And conveniently, the 4-hour POI, the highest time frame on today, was inside of this volume profile range, and we were continuously respecting it. So what I'm going to do with this zone and why it's different from Cramson's is because he measures the high and the low of the first from 8:30 to 8:45 or 8:44. He'll measure the high and the low that it created. He'll wait for a break out for a candle to close, breaking outside of that range, and then for a pullback into the volume profile zone, and then a break back out of it. So his trade, he actually entered, I'm pretty sure, right here, because that was the break, the retest, and then break back out of the zone. So that was his trade there, which his played out too. And then the reason why mine is different is because I'm not waiting for a break out of the high or the low of the first 15-minute range. I am solely just using the first 15-minute and creating a zone with the volume profile range. I'm not going to use it, or I'm not going to care if it breaks the high or the low. I'm just going to use it as a zone. And another added confluence. So if it's inside, if this is inside of a, let's say this was inside of a 15-minute gap, or inside of a rejection block or open range breakout of the first 15 minutes of New York session, or it's like today, there's a bullish POI inside of it, or liquidity sweep level inside of it, or this is like in the middle of equilibrium. It's just another added confluence to make the trade more higher probability. That's literally it. But all right, that's going to be the end of this video. Thank you for watching. If you watched to the end, like I said, go give Cramson a watch. He's he's a very good trader in person in general. So go check him out. Leave a like and subscribe. Join the free Discord and trade with me daily. Follow me on Instagram. That's where I'm the most active, and the Discord too. And go check out my YouTube description. There's some stuff you can get % off with, and if you use any of that stuff, then use my code if you feel like it. But that's about it. I'll see you guys in the next one. I'll promise I'll start making more videos, at least 1 or 2 a week. Promise. I'm going to start actually consistently uploading again, at least 1 or 2 a week, if not more. But again, thanks for watching. I'll see you guys in the next video.